Good afternoon. It's not a surprise, of course, that the Bank of England has raised rates. There's general agreement that the bank had to do more to address inflation, and the fact that it's a 50 basis point or half a point increase is also no surprise, given that the short-term outlook for inflation has deteriorated, with greater risks of a spillover going through in the longer term, and also other central banks are moving rates more quickly, and if the Bank of England had taken a much more passive approach, then there could have been a sharp sell-off in sterling and possibly damaging the Bank of England's credibility on the back of that. And on the growth side, sure, we've got a cost of living crisis. The consumer is going to be under pressure with rising interest rates and sharply increasing energy prices. So it's not a surprise at all that the Bank of England is forecasting recession at around the turn of the year.
The market reaction has been really interesting. I mean, you talk about what could have happened if the credibility of the Bank of England was brought into question today, that we might have seen a sell-off in sterling, but we are seeing a sell-off in sterling. To what extent is that down to these much more dire growth expectations? The fact that the Bank of England now says we're going to enter recession at the end of this year, and it's going to last for 5 quarters.
Yes, the overall feel of the Bank of England's forecast is pretty negative, but I'd say also pretty realistic as well. And there's probably a feeling amongst market players that the quicker rates go up, the quicker they may well have to go down over the course of next year, if, of course, inflation pressures subside, as we'd certainly be expecting. But, you know, you've got a lot of uncertainty there, lower growth forecasts with a recession embodied in it, and markets really don't like the overall tone, I think, of what the Bank of England is saying.
Where do you see interest rates ending this year, and what do you forecast in terms of rates next year?
Well, unfortunately, the fight against inflation isn't over, either here or overseas. It seems unlikely, in my view, that we're going to see another increase of 0.5%, but you know, we may get 225 basis point increases before the end of the year, and then perhaps a bit of a pause. And you know, we hope that's the point where the Bank of England feels that it's done enough work. Signs of weakness in the economy at that stage should be coming through by the end of the year, and then a wait, really, with rates just over 2%. The Bank of England has to be convinced that inflation is coming down and coming down sustainably. A lot here will depend, I guess, in the short term on the trajectory of gas prices, which are the most important driver over the next few months. But you know, with a recession on the cards, we were likely to see lower price pressures, unemployment rising, and really realistically similar trends being experienced overseas as well, which will help to reduce commodity price pressures too. So, you know, perhaps by the spring, middle of the year, we'd expect the Bank of England to be cautiously starting to cut rates to get some growth back into the economy again.